Within a year of trading, a fib retracement outlines large trading ranges despite rapid price fluctuations. Going from the weekly to monthly time frame is helpful to more clearly define the more substantial swing points. Going to a shorter time frame with the daily chart reveals more detail. The main focus turns to a double top reversal and retracement of an established downtrend. All three swing points closely approximate the large fib retracement levels for additional validity of the fib extension points. The downtrend lines can be useful, but like with other examples, the direct use with the fib extension is likely to be limited. The classic double top reversal reveals how fib extension levels tend to oppose a trend more at areas where extension and retracement levels are closer together. However, it does not necessarily mean these will always be the areas of larger reversals, as shown by the reversal on the 0.786 extension level at $14.02. As the downtrend drops below the fib retracement range, it is a reminder no fib level or levels can guarantee an exact reversal all the time. Short-term price action understood in the broader context is necessary for a more comprehensive picture. A large-scale reversal takes place around the 1.618 extension level, but it is not precise. Due to the sharper and wider price fluctuations in early March 2020, along with wider proportions between the fib extension levels from a larger base trend. As usual, fib extension levels can be used when the major trend starts to reverse, but a large fib retracement is another option to identify areas of potentially greater resistance to the developing trend. Downswings near retracement levels provide plenty of choices for 0.2 of a fib extension. As in most cases, it can be helpful to start with the very first retracement even when there are other choices further up in the trend. This allows fib extension levels to be validated with swing points from the old downtrend and current uptrend in a similar way to fib retracement levels. However, this results in a small base trend that can yield less effective proportions between fib levels as the trend produces larger and accelerated movements. Regardless of the size of the base trend or reference trend, fib extension and retracement levels are less precise in identifying major downswings from sharp and wide price fluctuations. This is especially pronounced with the sharp peak towards the $20 boundary in February 2021. Improving the base trend improves results, but lost precision is still normal and to be expected in the case of such a sharp peak. Since HMMJ was an ETF, and ETFs are generally less volatile than individual stocks, the chart of TLRY stock that is related to the broad sector covered by HMMJ will demonstrate the increased impact of greater volatility. During similar market conditions during the same approximate time period, TLRY starts with an even greater reversal from record highs. A fib retracement also helps identify more suitable swing points for a fib extension. 0.2 of the extension is at the first slightly lower downswing, rather than the next downswing that is slightly higher. This choice was made since it would have 0.2 closer to the 0.5 retracement level and lower the overall extension as the downtrend began to accelerate. Into December, adjustments made little difference in the next 2 years since the volatile start to the downtrend began to settle into more narrow ranges on a more gradual slide. A smaller base trend that already accurately captured opposing support on its 0.786 level was an alternative to reduce the wide distortion by the first choice for the base trend. During the continued contraction of price fluctuations into 2019. Results are marginally different, but the narrower fib extension is still quite imprecise due to the distortion of the sharp peak in 2018. On a side note, the IPO price range is a natural area of importance and provided a good reason to add the 1.272 and 1.414 levels for additional detail between the default 1 and 1.618 levels. As the chart rapidly changes between steep drops and flat trading, a new fib extension starting from a sharp peak provides another example of lowered effectiveness due to rapid and sharp price fluctuations. Even though conditions aren't as volatile as before, price action is still highly varied, and a smaller base trend only makes a minor difference as precision is still lost. In these kinds of extreme conditions, there is less that can be done to improve precision. One alternative is to find the most stable base trend and retracement possible that has point 3 immediately followed by a steep acceleration. This means gaps and/or 3 black crows type price action. This helps reduce volatile swing points for points 1 and 2. This is certainly helpful, but distortion and imprecision should still be expected in such volatile conditions.